Hey, what's up, Landon?
What's up, Kris?
Dude, welcome to the studio, brother.
Wow, this is an honor. This is quite the setup.
Invited Landon Kesler in here today. We're going to be doing the market updates here for you guys. Today, we're talking about Bonneville County. We're going to jump into some of the numbers. There's been a lot of news about interest rates. We're going to talk about that today, too.
Lots of news.
Let's just dive in. You guys know from the last market update, I like to talk about months supply of inventory. So in Bonneville County right now, Landon, we've got 3.6 months supply of inventory. You know, we always talk about those markets within a market, so we're going to jump into those here in a minute. But overall, as a market, we're still, I mean, it's close to a balanced market. We're kind of filling that.
I've been hearing that we've got inventory levels at some of the highest levels we've seen in a while, but 3.6 still doesn't seem like very many months.
It doesn't. You know, NAR says that under 4 months is a seller's market. Over 6 months is a buyer's market.
Wow, interesting.
And so right now we're sitting at 3.6, which it's a little bit deceiving. Currently in the market, we have 502 active properties. Days on market for the active is 82. That's a huge difference between the sold. 170 pending of those active at a 31% pending ratio. So it's not a weak market at all, but it's weakened over the last couple years.
Yeah.
So for sold properties in the last 3 months, there's 456 that have sold. 45 days on market is the average for sold properties. So, I mean, what does that tell you? If you got a house on the market right now and you're at 82 days on the market, probably need to be looking at a price reduction or maybe adjusting something. So 152 is what are sold per month, and they're selling at like 98.6% of the list price that they're listed at when they sell. So Landon and I were just talking about this number a little bit. This is a high number. The active properties, the average price right now is $628,000. That's a high number.
Yeah.
Right. I think the reason for that is what we're going to talk about here in a minute. The higher priced homes are sitting a lot longer. And so the sold prices, though, in this market, $438,000 is actually the final sold price. Landon, why do you think that is? What are we seeing with loans?
Well, when we're talking interest rates at the current levels, which they are down a little bit from their highs, it's just an affordability issue, right? And a lot of the people that have been sitting on the sidelines, at least from my experience, are those first-time home buyers just chomping at the bit, wanting to get into the market. And based on our area median incomes, that's kind of the max. And that's still, I think, pushing people to their limits in their personal home budgets. So I'm not necessarily surprised to see that. We also talked a little bit about all those folks that usually at certain times of their life are ready to upgrade their home. They're bursting at their seams. They've got 3 or 4 kids, and they've got to get a little bit bigger square footage, a little more bedrooms, and that puts you in that $600 to $700 price range.
Yep.
But they're not doing it.
No, they're not.
Why are they not doing it?
Let's look. What Landon's saying is so true. If we look at the grid view here, and he and I were talking about this, you can see this blue number or this blue line here is the under 500K market. And the month supply of inventory there is 3.1.
Yeah.
So, and that's kind of to Landon's point. So what you're saying is that's where everybody's buying right now that's financing. Are you seeing anybody really financing above 500 right now?
Not necessarily above the $500 loan amount. They might be purchasing a home in the higher price range, but it's because they've recently sold a home. They have a nice big chunk of equity that they're putting into that new home, financing quite a bit less, which makes it more affordable and manageable. We all know that we've increased a ton of equity over the last several years. And so people are taking advantage of that, whether they're moving to the area or they're finally deciding it's time to upgrade. But like I said before, most people are just having to buy in a certain price range. They don't have a ton of money to put down. It's because of their income. It only allows them to finance so much because of the monthly payment. Interest rates impact monthly payment more than anything. And so the higher the price range, the higher the loan amount, the more income you have to make. And, in Bonneville County, with area median incomes where they're at, kind of puts a limit on that thing.
It's impacting things for sure. Well, and we're seeing, inflation, things are more expensive right now. So that's affecting people and their ability to buy. We just talked about, had you bought a Rockwell home when the rates were at 2.5%, and let's say you paid $250,000 for it, which is kind of where they were when the rates were there, and you sold that home for 500 right now. So you had 250,000 in equity, and you went and bought an $800,000 home and used the 250 as a down, and you're financing 550.
Yeah.
Your payment, what was the payment before? It was like,
Yeah, in your head, you're thinking, I'm going to double my payment because I'm doubling how much of a loan I'm taking.
yeah.
Well, no, you had 2.5% interest rate. Now you're at maybe 6%.
I think the difference was 998,000 is what ChatGPT said, or $998 a
Yeah.
month was your payment, and it would increase your payment. It was almost $4,000.
Almost
is what your
$4,000.
payment would have been.
Yeah.
So huge impact.
Yeah, and we said people's income didn't necessarily increase
That's
by
right.
4 times in that same 4 or 5 year period.
Yeah.
So that is the affordability crisis that we're all feeling right now.
We're
in the market.
seeing. I think bottom line is, let's talk a little bit about, so under 500, we're still a very competitive market. We're seeing that with buyers. Buyers are very picky. If buyers are in the market for a home, it's really interesting. They know the inventory. They know what's on the market, and if they see something new hit, it's moving very quickly. And that's why you see this days on market for active. It's 72 is the average for the active properties, but we're clear down at 42 for the sold. And so, in that price range under 500 at 42 days, if you haven't sold yet, you probably want to start considering, how am I priced? What am I doing? What's the activity been like? Look at the feedback and make some adjustments.
It's interesting that you say that because in my world, I get excited when someone calls me and wants to get pre-approved for a mortgage. That excitement lasts about 2 or 3 days because guess why? They're calling me. They found
a house.
The house.
Yeah.
The house that they've been watching
Dreaming
online for. Their agents have been sending them listings, and all of a sudden a really great property pops up. Well, there's like 3 or 4 other people that saw the same house. They all go after it. They don't get it, and I don't hear from that borrower for another 2 or 3 months.
Yeah.
And then they come back with the next home. So not only are homes sitting, but we also have buyers sitting on the sideline waiting for rates to come down, waiting for the right listing to pop up. And yeah, they're picky. They're very picky right now.
Picky.
At least I'm not a real estate agent, but I hear from them all the time, and they're extremely picky, and they should be.
And we're seeing a few more concessions that way too. But I think the point you make, and it's a valid one, is if you are thinking about buying a home, you need to talk to a lender like right now. You need to have a plan. You need to know what you're qualified for, and that way, when that home does hit the market, like I said, it is skewed, and we're seeing multiple offer situations. I listed a lot a couple days ago, and we listed it fairly aggressively, but we had multiple offers, right? And so you're starting to see that come back where people are watching. They're very aware. So,
well, and if you haven't been pre-approved or got everything in line to make that offer and make a really strong offer with a good reputable lender that can send that pre-approval letter, if you haven't done that yet and you have to do it to get an offer in, you might miss the small window of opportunity to get in on that house.
So let's wrap this thing up. Let's talk about above 500. In the 500 to $1 million market, it's 4-month supply of inventory, which is a little deceiving. You hit 800 to 900 and then 900 to $1 million, that price range. You're at 11.2 months supply and 13 months supply. So those two price ranges within that market are definitely a buyer's market. They've moved under that, from 800,000 down to 500. You're still seeing some competition, but it is softening. And that's kind of the cliff we're talking about, right? That's that transitionary market where maybe they sell something and are trying to move up there, but we're seeing homes sit a little bit longer. It's interesting that the average days on market for the sold properties are very similar in the 5 to 6 and the 6 to 7, but once you get up to 7 to 800,000, you're hitting 72 as the average days. Overall, strong market. What are we hearing about rates right now, Landon?
Yeah, we had one of the most anticipated Fed meetings this week. As we're filming, it's Thursday. Yesterday was Wednesday. They came out with their interest rate decision and policy statement. And as the market was expecting, they cut the rates by 0.25%.
Mm-hmm.
What's been frustrating since that time is we had our Fed chair, Jerome Powell, go to the mic. He does a press conference after every meeting, and he just started discounting a lot of the market data that caused the rate cut decision to begin with. the reason for fewer jobs is because we're not hiring as many immigrants. And, he talked about inflation and how the tariffs, we're still a little bit unsure about the impact tariffs will have. And we anticipate inflation going to 3% by the end of the year versus. So what people don't understand is, yes, the Fed's cut rates 0.25%. We actually saw the improvement in rates leading up to the meeting, but then the meeting happens and we actually get the rate cut. Now rates are getting worse.
Because of the news.
Because of the news, they call it a hawkish or dovish tone. Hawkish meaning rates will probably stay higher for longer than the market was thinking. And that's why we're seeing a little bit of a pullback and rates creeping up just a hair. But it's all data dependent. We'll get another inflation report, another employment report, and it could cause a change. But yeah, that's what's interesting about Fed decisions and rate cuts is we usually see the impact before the meeting. And then when it actually happens, we don't see a whole lot.
Yeah, I think that's something you pointed out to me, and it's something people need to understand. If you're thinking that rates aren't affected until the announcement's actually made, you're wrong. Right. The markets are making adjustments, and you taught me this beforehand based on some of the sentiment and tones, and then some of those precursor markers that they're looking at.
Right.
They're starting to make some of those adjustments beforehand, and that's why, I actually heard that they went up today.
Yeah.
We announced that there's a rate drop and the rates went up. And so it's what you're saying about, Powell came in, maybe played a little politics, whatever that plays into it, but the messaging wasn't positive.
Right. And the consumer is always going to be behind. The masses are always behind. And so when a consumer hears this, I usually get the call or text today, tomorrow, next week. Hey, I heard rates dropped. Well, yes, the federal fund rate did drop. But those are not directly correlated with mortgage rates. Mortgage rates are all market driven. If you want to watch a market and gauge where rates are going, just follow the 10-year bond.
Mm-hmm.
That yield will tell you are rates improving or getting worse today based on where the yield is going. If it's going up, rates are going up. If it's coming down, mortgage rates are coming down.
We'll wrap this market update up. We're going to do these probably once a month here to start, maybe even more than that. Thanks for joining us today. Appreciate Landon being in the studio today.
Appreciate being here.
If you guys have any questions about this stuff, go ahead and reach out. Idaho First Mortgage. These guys are amazing. Legacy Ranch Properties. If you're looking to buy or sell, give us a holler and we'll be happy to help.